Good afternoon, everyone. I'm Richard's proxy. I'm Peter Bird, who heads up the Business Development Division for Rex Minerals. And what I hope to do in the next 15 minutes is just run you through the Rex opportunity, which we believe is exceptional. And of course, if there's follow-up questions, given the time of these presentations, don't hesitate to chase us down. Obvious disclaimer. So what is Rex? Australian listed, two Tier 1 assets located in first world countries. And I'll walk you through each of these. The first one on your left is the Hillside copper gold development in South Australia, fully permitted, C1 cost of $1.52, 1.9 million tonnes of contained copper. Very much green copper, which I'll touch on a little bit later. And then closer to home here in Colorado, located in Nevada, is the Hog Ranch epithermal gold project, already 2.2 million ounces of contained gold, low discovery cost, and clearly a premier North American address. There's a lot on this slide, but I'll just touch on a couple of things. About 600 million shares on issue, market cap of circa 120 million Australian dollars. Interestingly, an EV of over 130 million. We just completed a capital raising for another 8 million, so cash in the kitty of about 15 million bucks. As is always the case for these small cap companies, not a lot of institutional representation on the register. We expect that will change over time, as you grow and as there's recognition for the value of these assets, and of course no debt. So let's jump into both the assets. We'll deal with Hog Ranch, which is of course nearby to here. So what is Hog Ranch? Rex acquired this project in August of 2019. It's a classic epithermal caldera-hosted gold system, and in pretty short order increased the resource inventory to about 2.2 million ounces, and as I'll attempt to illustrate in this presentation, that's far from the end of the story. It's contained within a number of discrete projects. It was previously mined in the late 80s by a company that no longer exists, Western Mining Corporation, and we were fortunate enough to pick up this property a couple of years ago. So what you're looking at on this slide is an illustration on the left of the caldera. You've really got to visit the project to see just how big it is. It's a caldera that's totally intact, about 30 kilometres in diameter, and you can see in that illustration on the left there's a very distinct gold trend bombing through the centre of the caldera, and the little sort of pinky orange bits there is where the current resource, which is predominantly oxide, is defined. If you look on the image to the right, the resource is only down to about 100 vertical metres, so we haven't even addressed the issue of the sulphide, predominantly the sulphide mineralisation, which we fully expect to sit below that. One of the challenges that a small company has with two very big projects is how do you advance them forward from a value perspective? And we recognise that because of the timeline at Hillside is more advanced, we have to do something a bit smarter with both projects. So what we've initiated with respect to Hog Ranch is a strategic review. What does that mean? What it means is we're now actively seeking partners and/or an arrangement to further progress this project, because in order to continue to grow the inventory and then move from that to feasibility and subsequently production, you need money. So with respect to that, we've appointed a boutique group out of Sydney, Treadstone Partners, who are assisting us with that strategic review process. And of course, we'll consider a suite of funding alternatives. We love the project, but we know we just can't do both. Another little thing that's popped up as a positive with respect to Hog Ranch is we've now also identified, in addition to the gold inventory, there appears to be lithium located within the claystone lithology. For those of you not familiar with this, it appears to be geologically very similar to the McDermott caldera, which hosts the Thacker Pass lithium deposit. if we have a look at that, I'll just jump through this slide. But if we have a look at that in a little more detail, what we've done very recently is we've increased our land holding via staking an additional 700 mining claims around our existing claims. So we've fully stitched up the available gold and potentially lithium favourable stratigraphy within the caldera. This is just a cross-section of that mineralogy that's been located, but what appears to be happening is the tenor of the lithium appears to be increasing towards the centre of the caldera, again, not unlike Thacker Pass. So let's move from the Hog project to the Hillside project, so we're going to jump countries. What you're seeing in this slide here on the left is an image in South Australia, so the southern part of Australia, of where the Hillside project is located. Hillside was the discovery project that created Rex Minerals, and for those of you very familiar with IOCG deposits, it's not surprising it was discovered when up the road there's the Carrapateena Olympic Dam and Prominent Hill deposits. And some in the room might be aware that Carrapateena and Prominent Hill, which were hosted within Oz Minerals, have recently been swallowed up by BHP, which operates Olympic Dam. The image on the right illustrates, is just focusing in on where the Hillside project is, and we control over 2,000 or 2,200 square kilometres of favourable stratigraphy surrounding the Hillside mining lease. So the piece I'm going to talk about now is really just a very small postage stamp within our total leaseholding. This is what it looks like from the air. Wheat fields, we own a lot of the farmland in this image in our own right. We own in excess of $32 million worth of rural properties or farms, but as you can see, it's been disturbed for over 150 years, so that's of course assisted us in the permitting process, and I would stress this project is fully permitted now. Discovery hole was drilled in 2009, as I said earlier, an IOCG deposit, over 800 holes, 240 kilometres, I beg your pardon, of core, over $200 million spent to date on this project for what appears to be a very large project. What I'm going to illustrate in the next slide is a long section along that 2.3 kilometre strike. So we've got currently defined 1.9 million tonnes of contained copper within the resource and 1.5 million ounces of gold, which is not on the slide there. But the message to leave you here is, as you can see, this deposit still remains open to the north, open to the south and open at depth. So we've drilled 800 holes, but we're not even close to closing off what we believe is the ultimate envelope for this project. But you've got to start somewhere. We recently announced in December of last year a revised feasibility study, and what you're seeing in the long section image here is some of the outcomes of that. That feasibility study focused on stage 1 of the mine plan, which will deliver about 42,000 tonnes of copper, 30,000 ounces of gold within a concentrate, very high quality concentrate. That is stage 1 only. There is a subsequent stage 2 and a stage 3, each of which is approximately 10 years. So you can see this is a very long life project. Process flow sheet, very standard flow sheet, not unlike Carrapateena and Prominent Hill. These have been built before. We're working with Ausenco on this. It's designed to expand, so front-end capacity currently is 6 million tonnes per annum, but can grade to 8 and then 10, so there's up to 10 million tonnes of capacity in the front end of the plant. We're about 32% engineered as I stand here today. There's a lot of numbers on this slide, but I'll just get you to focus on the second column. So when we released that feasibility study, again, I stress on stage 1 only. We had a pre-tax valuation of, in Aussie dollars, of about 1.2 billion, a 4.3-year payback, and an all-in sustaining cost in US dollars of just under $1.80. So this thing really rocks above about $3.50. Clearly below $3, it's not as attractive, but I suppose our view is that the copper market, we're being reasonably conservative with respect to that going forward. Not unlike the Hog Ranch project, we've initiated a very strategic process with respect to this. Clearly, if you're going to build a project worth approximately $850 million in capital, and you're a company capped at about $120 million, that's somewhat challenging. So we've been working with Macquarie Capital Partners since February. We're going through a very structured process of seeking a minority partner. That partner could be a global mining house, a trading house, or obviously a copper smelter or refiner. So that process is going forward very aggressively currently. Very consistent feedback from that process is it's low geopolitical risk, very strong ESG credentials, and clearly that 1.9 million tonnes of contained copper is just the start of the story. So as soon as we get to the end of that, clearly we'll get on and start building. In parallel to that, we're working with Tier 1 domestic and international banks, enormous amount of interest in participating in what we believe will be about a 50-50 debt equity split to fund this project. From a timing perspective, of course, we're somewhat at the behest of the parties we're dealing with. They're dealing with a very detailed data room, but we would hope towards the end of this calendar year that we'll come to an end point which will allow us to move forward into construction. I'm not going to go on too much about the copper market other than to say we're very favoured towards it. I think the other thing that's worth mentioning with respect to Hillside is that it's got very strong ESG credentials both inside the fence and outside the fence. So what do I mean by that? Over 70% of the energy provided, i.e. electricity in South Australia, is from solar and wind. That will go to 100% by 2030, which is sort of when we'll be rocking. And then inside the fence, we're going to do both solar and water. So this is very attractive from the perspective of potential partners participating in the project. So just wrapping up, Rex, whilst a small company, I think we're incredibly blessed to have two exceptional projects of scale. They're the sort of projects that clearly should be within very large corporates. We've got a very structured process going on with respect to both. And I'll just leave you with this message: 1.9 million tonnes of contained copper in resource, 3.7 million ounces of gold. Both projects are not closed off with respect to exploration and growth, and a very defined process with respect to Hillside as to how we'll take that forward into production. And with that, I'll wrap up, and if there's a couple of questions, I'm happy to take them.
Thank you. Two questions. Can you talk a little bit about your shareholder base? And the second one, can you expand more about Treadstone's mandate? Are they hired to find you money or partners or both, and for what time period? Thank you.
Yeah, no, thank you. So as I touched upon in the presentation, our shareholder base is very open. We don't have, we've got one major institutional holder, and then the tail is very much, as you call it in North America, mum and pop, which is typical for a company of this size. And clearly, as your market cap grows, that tends to morph into more institutional money. So we're right on that cusp, I think. And clearly, the definition of a partner with respect to Hillside, I think, will be a catalyst event with respect to that. With respect to Treadstone, we engaged them about 2.5 months ago. It might be 3 months. And we've got a fairly open view about how we take that forward. In order to grow the Hog project, you probably need 20 to 25 million pumped into the ground over the next 2.5 years to better define and probably grow that resource. We don't have the bandwidth to do that ourselves. So the answer to your question is we have an open mind. Do we joint venture? Do we earn in? Do we outright do a sale? We've got an open mind to all of those. But Treadstone will manage that process. But I would say we've had a lot of very strong inbound interest.
Thanks so much, Richard.
No problem.
Okay. Round of applause.